We are alive, sir.
All right, everybody. This is episode 39 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Today's topics, Bitcoin in Turkey. Looks like we got a billboard floating around in Istanbul. It's showing the price of Bitcoin.
We are in the middle of Istanbul.
An interesting tweet from Preston Pish of the Investors Podcast about money managers and Bitcoin. And then last but not least, a great quick article from Jesse Colombo on the CEO to worker pay ratio and how that's driven really from fiat money, central banking, and then we'll talk a little bit about how Bitcoin might fix that in the decades to come. But other than that, man, how you doing this week?
Doing good. It's good to have you back. Good to get a new podcast rolling here, or a new episode, I'd say. As you're saying, the Bitcoin and Turkey thing is interesting. I'm going to play the video. It actually played a little bit earlier when I opened the Twitter page, but here it goes, and the sound.
We are in the middle of Istanbul. We are walking to the boat trip, and I see this big sign where the Bitcoin rates are on, next to the dollar and the euro. We are in the middle of Istanbul.
Yeah, so you can see here, I paused it, and it shows how many Bitcoin to the, I can't even read what that's saying, but I assume the lira, maybe? Am I wrong? I don't know. Do you know?
Yeah. I'm pretty sure that's what it would be. It would be, I guess, the lira priced in.
Because, lira dollar now is like.
Yeah, I think it's interesting just to see, one, it's on a billboard in the middle of Istanbul. It's interesting because, Turkey's been suffering from inflation for the last year, and a pretty significant amount of inflation as well. And it put the price of Bitcoin with its main competitors, right? The dollar, the euro, etc. So, I don't know who put that on the billboard, and it also might not even be anything significant. But I think the point to really talk about is that it happened, and I have a feeling, this might just be the first of many billboards where it'll be very common to see the price of Bitcoin just floating around at the bottom of a ticker on, CNBC or in the middle of Times Square. It'll be floating around just like everything else that all the other assets and securities that are priced. But do you think this trend will continue more, like it will hit the mainstream in countries that are suffering more from inflation? So, the question would be, do we start seeing the price of Bitcoin popping up in Argentina next?
That's a good question. Obviously now things are a little different. Everyone has a smartphone, so that also changes the dynamic, I guess you could say, of what you see. But the billboard thing is obviously really important. But like everyone having a smartphone and getting news, like when assets, whether it be Bitcoin, gold, stocks, you name it, start to march, people start seeing the name pop up. You know what I mean? Like Beyond Meat's a good example. Like that thing went ridiculous. Tilray. You obviously Bitcoin. You could say gold recently. You know what I mean? It's just
right.
As we were talking about before this, that we wanted to do an episode on why price drives options. Is that simple?
Right.
And I was just kind of making an interesting observation. If you're in an emerging, market currency in the past decade, if you lived in those countries, if you weren't in dollars, you got like screwed. It's just like you look at a lot of these currencies, like that's the Turkish lira, the South African rand. Losing over half your purchasing power against the global reserve currency.
Yeah, it sucks. Sometimes you just feel pretty lucky that you live in the United States and the dollar, although it's suffered severely from inflation, maybe on a much smaller scale and on a longer period of time, it still happens. But you've come away relatively unscathed compared to if you maybe grew up in Argentina and you've had the currency repegged. It's happened more than once. where you've woken up the next day and
Look at this.
I mean,
that's Argentina. It's the Argentine peso.
yeah.
I mean,
Yeah, I mean, I was just there in October of 2018. Okay, so that's, call it a year ago, and the like the pesos devalued an additional like 40% since I've been there. I mean, like enough so that it's like, oh, I might as well go back and like stuff's cheap.
it's
But
absolutely insane.
I mean, I think I actually was going to talk about this on another episode, but Argentina also has new capital controls in place to limit capital fleeing the country, but we'll get into that another time. And I'm sure it's just really interesting to see. And I guess I didn't look into the local Bitcoin's volume in Turkey, but I don't know. I guess the next question would be, at what price level, we talk about price driving adoption, at what price level or at what size of the market cap does Bitcoin need to get to for it to be seen more in the mainstream light and on a more consistent basis? So, at what point in time are we seeing it across the billboards in Times Square and it's like totally normal?
We definitely need 20,000 again to really start getting people in, but
Yeah.
and then eventually
Yeah, that's a good point.
after that, it's going to be interesting because what point do people like, holy shit, I gotta buy one of these before, because that's what people don't realize. Like, manias are really interesting phenomena. It's like where like no one had a fucking clue where Bitcoin was going in 2017. Like, I saw so many people tweet about different numbers. I saw 8,000 a lot. You saw certain numbers and people were like, it's over, and then bam, we were at 10K. You know what I mean? Like it, and even earlier. Who knows? After what comes after 20K, just because that's psychological of new highs. And then the obviously even a lot of retail, which even hundreds of thousands of people just trying to buy Bitcoin is going to drive the price up. I mean, the supply and demand factor. So it'll be interesting to see where this goes after that point. Like it's a scary thought because the numbers, as we've talked about before, can get really stupid.
Right.
Like, I'm not going to just say but if one Bitcoin equaled $100,000, people will be like, fuck. Like, pardon my language, but like, people will be like, shit, I should have bought some at 3,000.
Totally.
Which that's
totally.
a 33x, or you know what I mean? Like, it's something to think about. Like, we don't think about it, like, but if that happens, as I've talked about before, like, Bitcoin's basically it's not Bitcoin that's going up as much as it the dollar going down against it.
Yeah, right. A good way to think about that is one Bitcoin equals one Bitcoin, and the currencies around us are just losing purchasing power, annually, and they're all losing purchasing power at different rates. So, in places like Turkey, it's happening pretty fast. In places like Argentina, it's happening pretty fast as well. And now you have these currency wars between, China, the U.S., almost on a race to devalue their currency, which on one hand, it's not good because, people are going to lose their purchasing power and they won't make up for it with an increase in wages because, historically that typically doesn't happen. But on the other hand, if you're properly hedged, maybe you hold a little bit of Bitcoin, maybe you hold a little bit of gold, you have a seat at the table, I guess you could say. And I guess that kind of brings up the next topic of money managers and Bitcoin. And I saw this tweet from Preston Pish, and he's one of the guys on the Investors podcast. Really great podcast to listen to if you're into just your typical investing. They interview a lot of really brilliant people, so it's a good podcast to check out. But he interviewed Trace Mayer, years ago, and he's been holding Bitcoin, I think, since 2015. But he's been talking about it more publicly recently, obviously because the price is going back up. So I could understand why you'd want to talk about it. But his tweet kind of said, at what point should professional money managers be held accountable for a neglect of fiduciary duty for not having even the smallest exposure to something of this level of performance? And he posted a chart of Bitcoin risk adjusted returns versus other assets. And, that compared to US stocks, US real estate, bonds, gold, and oil. And the risk adjusted return was calculated by using the Sharpe ratio over a 4-year holding period. And quickly, just to explain what the Sharpe ratio is, it's a figure that's used to help investors understand the return of an investment compared to its risk. So the ratio is the average return earned in excess of the risk-free rate per unit of volatility or total risk. And for people who have no fucking clue what that means, don't worry about it. In other words, right?
It's like one of those formulas. It's just like shit.
Yeah.
Finance.
I mean, I remember studying the Sharpe ratio when I was sitting for my CFA exams. I mean, a lot of this stuff is kind of bullshit. If more common sense, it's basically the more bang for your buck. The higher the Sharpe ratio, the more attractive the risk adjusted return. So you can risk a little bit and have tremendous amount of upside. That's the best way to put it. So then this ratio, the higher it is, you're basically saying, I only have to risk a little bit to have a ton of reward. So it's just pretty much, I can't think of a better way of saying it than the bang for your buck.
Yeah.
And
would you say this is where the 1% Bitcoin plus 99% cash beats the S&P 500 risk and return?
Yeah. I mean, Plan B mentioned that a few months ago, and he showed this chart, and it was a 1% allocation to Bitcoin, 99% cash versus just holding the S&P 500. And I mean, it tracks pretty fucking close, and it outperforms in certain years. And I think that had rebalancing annually, which I personally wouldn't do, because why would I want to rebalance out of the best performing asset in the last decade? Not to mention the tax accounting and dealing with all that is just a fucking nightmare. But
rebalancing yearly.
Yeah. Okay. Right. That's what I thought. He rebalanced yearly. I mean, okay, if you're a big institutional fund or something like that, I can understand why you need to rebalance annually, because that 1% could turn into a substantial percentage of your portfolio. And ask any Bitcoiner who's been holding for a few years, their percentage of their net worth is now probably majority in Bitcoin, just because it's just appreciated so much, and all of a sudden it becomes a big portion of your wealth. And then it gets a little scary because, one day you're a millionaire, the next day you're not. And those swings can really be tough on you mentally. So I can understand why people.
Think about the people in 2017 that there were some numbers that got really stupid for some people.
I know one of my coworkers. Yeah.
Like when you think about people who, because altcoins are 50xing and Bitcoin 20x. I mean, if someone 50x something, it doesn't have to be that much to become a lot.
Mm-hmm. Yeah, I mean, it's really insane. I know a couple of coworkers became millionaires. They were holding pretty heavy ETH bags. I don't think they ended up. They didn't end up selling, and I'm sure they're still up in dollar terms, but unfortunately now they're definitely upside down. They'd rather have been holding Bitcoin otherwise. But that part's tough. If you can't sleep at night, you might have too much, and you're just going to either need to get over it or figure out how to manage that exposure. But I mean, when I look at this, and then what really made me take another look at this tweet, and I wanted to make it a topic of the podcast, was because Adam Back responded, and he pretty much made it pretty simple. So, and I'm paraphrasing here. So even if you have a 5% allocation to Bitcoin in your portfolio, and if Bitcoin pulls back 80%, your entire overall portfolio only declines 4%. Not too bad. But if it has another 100x return, then your overall portfolio goes up, I think 5x, which is insane. If you think about having your portfolio go up 500% overall by having a 5% exposure to something. I mean, it is pretty insane. And then that's when you get to the point. It was like, okay, well, do I need to, shuffle my portfolio around again after that? But that just shows you the bang for your buck that you can really get. And when I think about the average person who doesn't have exposure to equities, your typical worker has a decent job, whatever, just trying to take care of their bills or family. If I'm them, or I'm a millennial coming out of school, or even some of the younger generations, why wouldn't I just buy a little bit of Bitcoin? They're digital natives. They're playing around on Cash App. Why wouldn't you buy a couple bucks worth a week, and all of a sudden that becomes the majority of your net worth in 5 years or 10 years? I mean, to me, it seems like an easier sell than trying to pitch all these stocks who have just been that are currently at all-time highs, actually, which is mind-blowing. I don't know. To me, it's an easier sell, and it's much safer. I mean, 99% in cash, you just kind of sit and wait, and then throw a little bit each week.
You're liquid, so you have options.
Yeah, I mean, you're literally as liquid as you can possibly be, because Bitcoin's the one asset that you can get rid of for fiat 24 hours a day, 365. I mean, that's the reality. If you're talking about equities or real estate, you can only trade those for fiat during market hours, and you can't do it on the weekends. And selling your home can take a while too. So you get to keep basically 100% of your portfolio as liquid as possible, which is, I don't know, I think it has its advantages, certainly in times of uncertainty.
Exactly. Another thing I think we wanted to mention quickly is the liquidity. I can't say it. Do you know how to say his name? Is it Holger Schneips? I can't even say it.
Yeah, close enough.
Anyways, I believe he's German, and he always posts phenomenal charts. Here's an example again of like on FinTwit. You just get these people who are really bright, who talk about things, so you just learn a lot and absorb it. Anyways, it's liquidity stupid. Stocks fell in August because global money supply fell by 1.4 trillion. September began very strong with a surge in global liquidity by 400 billion. If you're watching, you'll be able to see the chart. Like the global money supply in S&P 500. What would you say the correlation here is? 99%, 95%. I mean, it's above 95% or something. It's very close. And so it's pretty interesting to watch that happen. I mean, you could see it in a lot of charts. I feel like even though gold rebounded, last year in September or August, it really has rallied since basically, it's rallied. I mean, in somewhat unison with this whole money supply thing. And then on top of that, you could say Bitcoin's definitely rallied. I mean, we can't deny that Bitcoin's went from 3,000 to 14K basically in the span of 5-6 months because of basically the whole turn. I mean, I think the turnaround. I mean, you think about stocks and everything bounced, and that December bounce. When the Fed caved, and then you had also was it People's Bank of China pumping $1 trillion worth of liquidity in the system, like, and
right.
So I guess Bitcoin just keeps going. The more fiat that's printed, the more Bitcoin gets speculated on. It's that simple.
Yeah, no, I think that's something to definitely keep in mind when thinking about all of these assets and just all the uncertainty. And to bring up the question that we were talking about last time with regards to money managers and Bitcoin. So, and I think this is the conclusion that at least I've come to, and I've heard other people say this when you're maybe debating about Bitcoin with somebody who's just like hasn't really done a lot of research in it, or they're just a little conservative when it comes to Bitcoin, just not interested in it at all. And you say, okay, well, let's talk about the facts for just a second. Regardless of what you think about it, tulip mania, whatever, best performing asset in the last decade. We also know that you can hold 1% of it in your portfolio, 99% cash, and you can outperform the S&P 500. Okay, we know that's also a fact. So at what point or at what price will money managers be held accountable for not even suggesting it or recommending
50K.
it?
I'm just gonna say it, 50K.
Well, 50K is interesting because that's approximately around when Bitcoin would reach a $1 trillion market cap. So that makes sense. I mean, a good reason if I were a money manager and I was, if one of my clients was trying to encourage me to, I don't know, suggest Bitcoin to them, I'd say, well, it's still small, relatively speaking. We're talking, call it $200 billion market. It's a drop in the bucket compared to the trillions in other assets. So that could be one thing. The other reason why a money manager wouldn't recommend it is because there's not a lot of instruments for them to help their clients get exposure to. Now, that's going to be changing. We have BACT starting actually this month in another 15 days or so. The daily futures trading and monthly futures trading of physically settled Bitcoin, that will start this month. So, that gives them an option. They also have exposure with GBTC, which is that grayscale trust. So, you're going to pay a fairly hefty premium, but that gives you some sort of synthetic exposure. So I understand from a regulatory standpoint and just a logistics standpoint, how do you get exposure for your clients? But at what point or what price are you really not doing your fiduciary duty and saying, well, fuck, man, I'm sorry I missed this one, but it might be time for you to get a little exposure. I don't know. What do you think?
Yeah, I mean, as I mentioned, I just said 50K. I mean, I think that's a number that's pretty absurd number, and that'll be something you'd see that would really start drawing people in, and that's a scary thought, considering the more fiat printed, the more it goes. And the question is just like the 1929 bubbles: when does the music stop? When do central banks cut it off? If they do, because the second they cut off the faucet, it all goes to shit, like what happened in the end of 2018.
Right. I mean, right when they started raising rates, right?
Yeah, because as Raul Pal says, it was the largest increase of rates, and I think I've mentioned this before in the podcast. We went from 25 basis points to 225 basis points, maybe 250. We were pretty close, so nearly a 10x in the value.
It's a big increase.
That's 10x in your cost of any kind of interest payment. That's insane. The lending of money.
Right. And we know just historically looking at those contractionary and expansionary monetary policies are the actual cause of
boom and bust cycle.
Right. I mean, I know that's typically not liked from a Keynesian economist. They just choose to ignore that simple fact. But I mean, that's the real driver. And it's really obvious once you've sat and kind of thought about it for a little bit. And now, this will be like the second or third time in a row, 2007, 8, 2001, where they've had to cut to save the markets to prevent a complete catastrophe. And, in certain parts of the country or of the world, we're already going negative. And unfortunately, it wouldn't surprise me if we go negative here in the U.S. at some point. And we're going to see another rate cut here in September. I'm not 100% sure, but I think that's the speculation. So, what happens then?
When's that meeting's coming up? It's got to be pretty soon.
Yeah. I think it's middle of September. I don't recall the date off the top of my head, but
2 weeks away probably.
Yeah.
So maybe if it's not this trading week, it's next trading week, basically.
Right.
Is it the 16th? No. It's probably the 17th or 18th. Or it might be the 9th or 10th.
I really don't. I haven't heard about it.
It's probably FOMC meeting.
I haven't heard about it on Twitter recently, so I'm assuming it's still like a couple weeks away, or else if it were next week, I feel like somebody would have mentioned it. But, that's the last time we cut, Bitcoin really took off.
17th and 18th.
Okay. All right. Yeah. So we have another cut coming up, and we know cuts increase liquidity into the market. Cash starts flowing again, trying to help save everything. Inflation starts to set in. To me personally, it's bullish for Bitcoin. Historically, these cuts have led to more pumps, which of course I'm totally fine with. And the timing of everything starts to get really interesting with rate cuts, negative rates, heading back to zero or negative for the U.S., futures for backed launching, other products and services being announced. And you mentioned this a couple minutes ago, but the numbers get a little wacky once you start, especially that $1 trillion market cap, that 50K number. Don't forget, 100K is it's really like a chip shot from here. It's a 10x, which is almost nothing when you look at historically how the bubbles have gone.
Yeah,
like
20x.
I know it sounds crazy. You were talking about 6-figure Bitcoin, but some people didn't think we'd ever hit 4-figure or 5-figure Bitcoin. And like we did, and it happens very quickly. And so that's where, if you're a high net worth individual and you're bleeding, or let's say there's a deflationary recession and stocks are collapsing, rate cuts are going through the roof, inflation sets in, and you turn and look and say, well, what the fuck? I can't believe you didn't mention anything about, and Bitcoin's heading to new all-time highs, right? And once it breaks 20K, that's when the fun really starts, because it's all upside from there. There's nothing real. There's only those mental barriers of resistance, I guess. It can get pretty fucking nuts.
Yeah. I mean, it's like when, I like when people talk about like fiat currencies being stable, and like, as you mentioned earlier, you were in Argentina not too long ago and boom, it's depreciated 40%. I mean, here's the pound against the dollar. I mean, look at that in 2007 into 2009. I mean, literally almost, 45, but it's less than 50%, but it's like 45% decrease.
Yeah.
And then now it's even worse,
Yeah, I mean, it matters. Yep. I mean, I don't know. We're going to see more rate cuts, more fiat money printing, which perfectly leads into the next topic, which is the CEO worker to pay ratio. Jesse Colombo, one of our favorite analysts, who surprisingly is allowed to contribute to Forbes, had a great article talking about this. And, pretty much in the US, the CEO worker to pay ratio is just completely soared in the last 50 years. And it's about 278 to 1 in 2018. And it was 58 to 1 in 1989. And it was 20 to 1 in 1965. Now, I'm not saying that CEOs shouldn't be compensated what they're worth, since they bear the brunt of the majority of the responsibility of the performance of the firm. It is interesting that their pay has increased pretty much 1,000% over the last 40 years, while the average worker has had 12 to 15%. I mean, it's pretty low. And this is a big talking point for a lot of people, saying corporate greed and CEOs are paid too much, and trying to limit them with different rules and regulations. But nobody really talks about the root cause of the problem, which of course is
financialization of the markets.
Right. It's the fiat money printing machine and the distortion of interest rates. And their pay has really increased because of their stock options, right? So if you're the CEO of a publicly traded company, maybe your salary's $350,000 or $500,000, but you get a shitload of stock options on top of that, right? So the stock options are one thing. Maybe the stocks go up, maybe the stock goes down. But when you have manipulation of the interest rates and quantitative easing, all of these other asset prices start to get inflated. We see it in real estate. We see it in equities. We've had this crazy equity bull market for the last decade. And, the CEOs of these companies, or anybody holding stock options, really, really benefit from that. Not to mention that they have a tremendous amount of insider information, seeing as though they're the leaders of the company. But, why do you think people like to blame free markets and capitalism for this, but what's the real issue here?
I mean, as we always say, it's the money itself, or the currency in this case. That's the biggest issue. It's the fiat currency. It's the manipulation of it. It's the idea again that central banks will save the day. And I've read a lot lately about people talking about people thought it was the end of times in 2000. There's no way the financial markets survive. Well, they did, and then came the housing bubble, which just completely wrecked everything. And central banks all swooped in, cut rates to nothing, and voila, we've had a decade of free markets. And as Paranoid Bull always says, if you don't follow him on Twitter. He always says, a decade of manipulation has consequences, and there's some truth behind that. I mean, things get really distorted, and when reality sets in eventually, the price swings will probably be pretty scary and volatile, of course.
Right, and he also mentions, which I think is a great saying, like the myth of the infallible central bank, and people really do believe that the state or the central bank, like they can really save everything. It's unfortunate that they've kind of been indoctrinated into thinking that, and I know for a fact, one of my boomer coworkers are during all the big downturns this past year in December of 2018, like all that volatility, he's like, it'll just keep going up. I'm not worried about it. And they say the same thing about the housing market in California. They're like, oh, it's always a buy, like it's always going up. And I'm just like, I can't believe you think that to be true. Like in reality, like housing markets in California just always go up, or stocks always go up, and that's just always the case. I mean, sure, I guess over the last 100 years, they go up and they go down, but predominantly they go up. But the real question is, would they have gone up without any kind of intervention in the money supply? And I think that isn't necessarily the case. I think the good performing companies would, of course, grow and their stock prices would increase and they'd pay out their dividends, et cetera. But, when you have other companies who are literally being saved from the automatic purchasing of the stock from whether it be pension funds or even 401ks and just regular passive investing. And I think this is a topic I want to get into on another podcast, but so much money is going into equities passively. Even, for me, myself, like my 401k, like every 2 weeks, there are buy orders being filled, just buying equities passively, just boom.
Ridiculous. People don't think about it.
Every 2 weeks. And I don't even think about it. I just think to myself, well, I hope that money is going to be there when I need to retire. I'm not banking on it. I'm going to save, otherwise.
Do you know what it goes into? Like, is it just like index, like S&P trackers, like SPY or something like that?
You can pick what you want it to go into. They have like money market funds, which would be a cash allocation. They have bond funds, equity funds, and you can look at the prospectus of each one. They're typically Vanguard funds.
Yeah.
But I mean, literally the Vanguard funds for anybody with a corporate job, they have been propping up the stock market significantly.
Yeah, I think as you said, it's passive every 2 weeks.
Yeah.
I mean, we always talk about they always talk about the millennium boom, which is perfect. In '82, it just goes. And what does the backside of this look like? I mean, when you zoom out, it's pretty scary. It's like, what is the backside of this? Huge distortion. Right. I mean, the fact that most likely that any real support would be found at 2008 lows is, that's 75% for the index. That would be soul crushing. And obviously there'd be a lot of malinvestment that'd be wiped out. I mean, I think every IPO that's recently IPO is going to get wrecked. I don't think because every IPO doesn't make any money. What happens when things downturn? What happens when, and people say, oh, Uber, Lyft are resilient, but what we don't know that.
Right. We don't know that. We don't even know that any of those business models are sound because you have, more shares being issued. You have just so much money coming into them that they can afford to not make any money for surprisingly really long fucking periods of time.
People keep
which
funding them. I mean,
people keep funding them.
For
like
a
they
decade. They don't. We need to put our money somewhere, and this thing keeps growing from what, $1 billion company, or let's say a couple $100 million company to a few billion. People are like, fuck it, and they buy in at $3 billion valuation, and they're able to exit at what did Uber IPO for? Something stupid, right? Wasn't it 80 billion, something like that?
Yeah.
It was something really stupid. Of course, I'm going to offer quarterly sticks on Uber.
Yeah, I mean, it's hard because it's hard to say like, oh, Uber's a shit coin, for lack of a better term.
It is a shit coin, dude. All these recent IPOs are shit coins. I mean, the charts they don't matter. It's just
charts don't matter.
As Uncle Jay says, that there's no history to them. It doesn't matter. We are in complete price discovery basically for Uber.
Yeah. And I think, if you think back to 2001, all of the ICOs, all of the stock market bubble. I mean, don't get me wrong, Amazon didn't make money for a very long time, and it ended up ultimately surviving and, did very well. Everybody loves Amazon. Fantastic company, created tons and tons of jobs. They deliver anything pretty much that I can get my hands on in 2 days or less. They made it. They survived, right? They survived not being profitable for a significant amount of time to then ultimately being very profitable. And I don't see. We'll see that again this time around, but it's hard to say who are the winners, who are the losers, and in this next round of, call it the second kind of .com bubble of all of the app bubble, basically all of these apps that have been that have gone public that don't make money yet, and it's hard to say which ones come out alive. But a lot of the ideas are fantastic, right? Like ride sharing is a no-brainer. Like clearly I want to be able to get picked up with my phone from anywhere. Like that's fantastic. I'm glad that exists. They just need to figure out how to make money, and in a downturn, someone's going to figure out how to do it and make money. But it's just hard to say.
Lyft from its peak on the IPO day to its trough now, it's actually its lowest point, basically on Friday, is down nearly 50%, 49.76. So I call that 50% basically.
Wow.
I mean, and it IPO'd in end of March, early April. Where does this thing, rest? I mean, it could go down for a long time before anyone buys it.
Yeah, I mean, it really could. It really could.
It's still a $13 billion market cap. I was looking at Uber earlier. Uber was $54 billion. So at its peak of $46, and it's at 30 now or something like that. At its peak of, it was probably a $100 billion company easily at one point at peak valuation. Had to be pretty close, which is pretty incredible thought. That's like shit. That's such an immense value, and it doesn't make money.
Yeah. No, I mean, it just goes to show you there's a lot of distortion. Yeah, there's just
People
a lot
are just
of
trying to sell their
distortion
bags higher. It's the same thing with all the negative yielding bonds. The bond prices are going nuts, and people are just looking to buy it at 150 and sell it to someone at 175.
Right. Oh, I forgot. I wanted to kind of bring this back into the meme of how Bitcoin fixes this. You wouldn't have, and this goes for any kind of sound money standard, hopefully, that you wouldn't see this manipulation of the money supply or interest rates in a non-fiat system. So we wouldn't therefore get these huge distortions that we see today, whether it be CEO to worker pay, whether that be insane stock valuations. You wouldn't get these, or my favorite is real estate, because I think real estate really gets distorted because, I mean, when you think about real estate, I like to think about it as a store of value. And I think a lot of people think about real estate as a store of value because The money that we currently have today doesn't serve that function. It purposefully does not serve the function of storing value because it's depreciating over time and you're losing that purchasing power. So I'm hopeful that as we transition into a sound money standard, because I think that's kind of inevitable, like the cat's out of the bag, we're going to have to go that way one way or another, regardless of what it is. Hopefully these crazy out of whack bubbles really start to get themselves back into line. And we know that fiat's the cause because that's what's new. So, that's what honestly just keeps me hopeful about a lot of this stuff, because it's just so distorted and ridiculous that it's false and it's wrong. And I'm really looking forward to the day when that kind of stuff just isn't possible.
Yeah, and I was talking about this before, and we've mentioned before, like professional sports is a perfect example.
Yeah.
And I've seen people mention on Twitter, but like examples, this year's NFL has just been absurd. And I don't follow the NFL that closely, but it's just everyone's talking about it. Whether you talk about Antonio Brown and his whole spiel, and I think I saw something earlier about, like, was it Dak Prescott of the Dallas Cowboys, like, wanted some stupid number. And then today was something about Julio Jones, or one day ago, whatever, Falcons agreed a $66 million contract extension for 3 years, $64 million guaranteed. I mean, and the funny thing is, I mentioned to you before we started recording, was no one bitches, I'm going to say bitches because that's the reality, bitches about professional sports athletes getting paid absurd numbers, to hit a ball, catch a ball, etc. Where it's not really benefiting them. It's not like the CEO of a corporation who's creating, economic. I mean, sure, there are certain jobs created from having these things, but it's just like, again, when you look at the prices of like NFL teams where they've came from even in like the year 2000 to 2018, it's ridiculous in the past, or 19, I guess now, how expensive these teams have become. And the same thing with other sports too, where they talk about Major League Baseball, NHL, you name it, the NBA. The NBA has ridiculous contracts, dude. You see those things? Because there's only a certain amount of players. Like, what, the team carries 11 guys, so someone can get paid like 100 and there's somebody, I can't remember who it was. It might have been Memphis Grizzlies or something. It was paid like, I think it was like 150 million for like, it was either 3 or 5 years or something stupid. I don't know.
Yeah.
It's getting ridiculous, but here again, as we talk about like fiat money, people have money people don't care about them. Not that they just don't save, so they'll spend on things like that. And you know how those things are. Everything's expensive there. It doesn't matter if you're just getting one beer or one drink or a piece of pizza. It's stupid expensive. So
right.
I don't know. It's just, I think we're gonna see professional sports just get decimated when there's a downturn.
Yeah, I can't see the turnout for a lot of these things increasing during a deflationary recession. It's just not going to happen. And in the off chance we have a global repricing event into a different asset or currency, I think things will start to really come in line, because you'll be able to perform more economic calculation that way. So if you're the owner of a sports team, you're going to know how much you literally can, from a salary cap standpoint, pay your players in order for the business to be profitable. So these the leagues themselves will they'll be better overall. I think everything will happen exactly as it should. But when you think about that, and the sports is such a good one, you can look around and just really see the distortion from fiat, and it's fucking crazy to see.
Yeah, they're talking about it. I pulled up an article from 2009 from CNN Money, before CNN became an absolute shithole. Sorry, just gotta say it for what it is. They're talking about the recession. This is August 31st, 2009. Talking about the recession hurting, pro teams, revenue, etc. Like, they're talking about here, overall ticket sales numbers are down, and then talking about, concessions, and that affects everything. Because as we were talking about just a second ago, concessions are expensive, so they're making fat margins on pizza. Like when you're selling pizza $3.50 or $3 a slice, when it costs less than $1 to make, if let's say 50 cents at most goes into that pizza per slice, if not even less, it might be like 25 cents for all we know. the margins are ridiculous there.
Yeah. Yeah, it's completely insane. It's completely insane.
Yeah.
What do you think? Is that a good way to wrap it up?
And that's a good way to wrap it up. I mean, it is going to be interesting. I really think the sports side will be interesting to see, because then you're going to think about how many owners are going to try to sell their teams as their team's prices become worth less and less and less, as we talk about,
Right.
like classic art, or not classic art, but art, cars, etc. That will be very interesting to see what happens. Will owners who've 20x their team's worth sell it or not?
Right. No, it's a good question. I don't know, but I have a feeling we're going to find out if shit hits the fan, or when, I guess is a better way to put it. But yeah, that was episode 39 of the Beef and Bitcoin podcast. Make sure to like and subscribe on YouTube. Share this to your friends, family, loved ones. Leave us a review. It definitely helps get us to the top of the charts. And just fucking be smart out there. All right, peace.
So better be smart.